Ladies and gentlemen, good day and welcome to the Q4 and FY22 earnings conference call of Rajoo Engineer Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mrs. Khushbu Chandrakant Doshi from Rajoo Engineers Limited. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. I'm Khushbu Chandrakant Doshi, and joining with me, Mr. Sunil Jain, our Executive Director, Mr. Jayantilal Jalavadia, our CFO, Mr. Prakash Daga, our Vice President Finance, and Brij IR, our Investor Relations team. Warm welcome to all of you on this Rajoo Engineers Limited earnings conference call for the fourth quarter and year ended 31st March 2022. I thank you for taking your time out and joining us today to discuss the financials and business performance. Before we get into the business and financial performance of the fourth quarter, I would like to share a brief insight about our company and the industry as over. If we talk about the recent development, a year ago, we hoped that we had seen the worst of the pandemic, but the second one was said proved much more difficult than the first one. Communities, families, and individuals have suffered a great deal, and I know some of you endured personal losses too. The peak of the second wave was a very difficult period, but I'm so proud of how our group responded to it. We rose to the challenges and showed courage and selflessness with the Rajoo spirit. With our strong vision, backed by passion of R&D and commendable teamwork, helped us to navigate the tough economic conditions in prevailing then. Changes in consumer behavior, considering the health and hygiene, resulted into high demand of flexible packaging for packaged food, takeaway, e-commerce, and pharma. Good orders booking for blown film line, not only from the domestic market, but also from the export market, resulted into a win-win situation for all our stakeholders. The recent Ukraine-Russia war also had an impact on the global economy and commodity prices, availability of the material, which led to the inflation. Moreover, recent lockdowns in a key manufacturing and trade hubs, China, has impacted supplies of our customers, and this has also led to a little muted demand in the fourth quarter. The prices of major raw materials and fuel have been increasing continuously. Steel prices had gone up to 23%, aluminum prices has gone up to 35% compared to March 21. Despite dynamic and challenging environment, Rajoo has had a good performance. The Indian plastic industry produces a wide array of plastic, including PP, PE, PET, and PVC, and many more. But we at Rajoo deal with all 4 of them. So India's demand for PET in the packaging of food and beverage has witnessed a further increase during the pandemic, boosted by the higher awareness of hygiene and enhanced procurement of disposable and packaged items for reducing the chances of virus infection. For the prospect of India's PVC market, the demand for PVC in the country is estimated to achieve a CAGR of over 6.81% during the 2025. Pipe-grade PVC accounts for over 40% of the overall demand as it's used in the production of water distribution and underground irrigation pipes. Now, to give a brief background about the company emerged as one of the leading plastic extrusion machinery manufacturer in India with nearly 35 years of excellence in extrusion in the industry. It is the first extrusion company in India to be completely automated and has kept in step with technology to provide customers with the best services. Owing to our focused efforts, the company enjoys a premium market position in the segment. In line with our strategy, we continue to expand our global footprint with focus on market penetration and sustained investments in research and development to support the progress. With representation in many countries across the world and customers in over 70 plus countries, our export has multiplied since debuting in the international market in 1990. Recently, we unveiled extrusion coating and lamination machine as a post-extrusion process to substitute conventional adhesive lamination process for producing laminates for various packaging applications and also for the raffia and paper. Our brand reliability and position in the global market is further fortified through a number of alliances in the industry, such as with Concall Industries in India, Meef Industries in Netherlands, Balzano and Figli from Italy, and Wonderpack from India. It is an industry practice to build a machine with client specifications to gain competitive advantage. However, at Rajoo, we have always been pioneer of change and innovation by identifying just the right technology and its mix to add value to a client's business. We are being appreciated by stalwart in the business for the appropriate technology approach to constantly help customers' business with customized solutions rather than following the traditional approach. Coming to our financial performance, in the quarter ended 31st March 2022, our company achieved net revenue of 59.93 crore, an increase of nearly 6.83% year-on-year. While domestic as well as export sales grew this quarter, revenue growth was marginal mainly due to company's focus on business sustainability considering the uncertainty around. Despite volatility and increase in raw material prices and higher logistic cost, we have managed to maintain EBITDA margin and improved PAT margin. The EBITDA stood at rupees 8.36 crore in Q4 FY22 as against 6.04 crore in previous corresponding period, increase of 38.24% YOY. Improved operational efficiencies coupled with revised machine price offset the increase in the raw material prices. Also, the effect of volatility in international logistic costs have been managed to a large extent by accepting orders on FOB terms. EBITDA margin was at 13.94 as against 77% YOY increase of 317 BPS. Profit after tax was rupees 7.1 crore in Q4 FY22 compared to rupees 3.35 crore in Q4 FY21, raising 111%. PAT margin was at 11.85% as against 5.98% YOY increase of 587 BPS. We adopted the option of lower income tax at 22% under a section of 115 BAA of Income Tax Act for the FY22, which reduced the income tax provision for FY22. Basic EPS stood at 1.15 in Q4 FY22 as compared to 0.55 in Q4 FY21. Coming to the year-ended financial performance, the revenue from operation in FY22 is rupees 172.30 crore as against rupees 152.25 crore in FY21, a YOY increase of 13.17% due to healthy order book and converting them to the sales in the both domestic and export market. EBITDA, excluding other incomes, stood at rupees 20.97 crore in FY22 as against rupees 18.74 crore in FY21, an increase of 11.91 YOY. EBITDA margin was at 12.17%, a decrease of 14 BPS YOY due to volatile raw material cost, logistic cost, and travel cost, resulting into a pressure on the margin for FY22. Profit after tax was rupees 14.80 crore in FY22 compared to rupees 10.41 crore in FY21. YOY increase of 42.21%, while PAT margin was at 8.59%, an increase of 176 BPS YOY. Basic EPS stood at rupees 2.40 in FY22 as compared to rupees 1.69 crore in FY21. So with this brief, I thank you very much and invite you to ask any question that you may have.
Thank you very much, ma'am.
Thank
We
you.
will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shivam Prasad, an individual investor. Please go ahead.
Hello, am I audible?
Yes, sir.
Can you just highlight the market share that you are having on the industry basis?
Okay. If we have to talk about the market share, the product basket is not similar of all the other market companions. But if we talk about the blown film line, from the last 3 years, we are having the majority market share as compared to other 2 market companies.
Can you just specify the number in the blown film line, like majority? I don't know. Can you just specify any number, any percentage?
In terms of number of machine you are asking, sir?
No, the percentage of market share in the blown film lines.
So we, if you are aware about the industry, majority 3 players are in the market, and you can say that we are the highest one, and second highest is other 2. And if we talk about the numbers, we hold around 40% of the market share in blown film segment.
40%. And what are the names of other 2? Can you just specify if possible from your end?
Those are all the public listed company, and of course Windsor Machines and Cabra Extrusion Technology. But our product range are different. Only one product is separate.
Okay, and can you just one more question? Can you just highlight the percentage of cost price increase that you have been able to pass on to the customers this quarter or this year, this fiscal year? Sorry.
Okay, so we could pass on almost 8 to 9% additional cost to the customer this year. But of course, these are not on the orders which are being committed. We have come up with the new pricing, and that's how we have passed on.
So now from the coming quarter, the full price increase will you be able to pass on or partial only?
From coming quarter, in order booking, we will be able to, but of course, we have a pending orders which we're going to execute at the old prices.
Okay, and as I can see that your sales have crossed the numbers of March 2018 very well. So can you just highlight what's the percentage rise in sales in terms of price increase or volume increase? Is it the
No,
price
it is. Yeah, good question. It is a volume growth. If we talk about number of machines, in a FY20 it was 1,710. Okay, so FY18 you are benchmarking, so it was more of around 100 plus machines, and this year it has increased because of the volume of the product. So this year we have supplied 117 machines.
117. And can you just tell me the number of machines of FY21 also, in which you are having 150 crores of revenue?
FY21 it was 107.
It was 107. Okay, and as I can see that you are not able to reach to the EBITDA or to the operating profit margin percentage of FY18 till now, as you have been able to increase the volume. So when can you reach back to the 15% 15% margin mark?
Okay, we are working on that, and probably this year, FY23, we will able to see that. What is happening? We are able to pass on the increased price to the customer, but by the time we pass on, the increment will be again from the market. So considering the uncertainty around and the pricing of raw material is so volatile, and of course the supply chain is also a big issue, has resulted into this. But we feel that in FY23 we will have a good old numbers back.
Okay. And can you just specify from which sectors are you getting the maximum, like you have got the maximum volume growth this year?
Yeah, so basically it's a flexible packaging industry.
From the flexible packaging industry.
Yeah.
Okay. And do you see this as a pent-up demand, or do you see it as more of a long-term thing you are projecting?
No, we are seeing this now as a long-term thing because we are now not only focusing on an Indian market, but world is the market. And considering the pandemic around, demand has surged quite more than the expectation. And we feel that it will continue for the next 2 years as well.
Okay. Can you just give me a ballpark figure of how much revenue are you expecting in FY23 and how much is the percentage of exports will be from that?
Currently, we are having an export of 49%, and we feel that we would continue with the same numbers as far as domestic is concerned. But export, if we talk about the percentages, we would be reaching to a 60%. That is the target for the next year.
Any guidance for the number of machines that you will be selling in FY23 and any capex plans?
No capex plan, and if we talk about the number of machines, we are not focusing on more number of machines, but we are more focusing on the advanced machines with the technological advancement. And so it may not have much relevance with the number of machines, but it has a relevance with the total revenue.
And one last question: that what's the competition are you facing from the unorganized sector? Apart from the organized players, like you three are the organized players in this industry, what percentage of the market share does the unorganized players hold?
There are many unorganized players who supply the 5 machines or 10 machines in a year or something like that, and we face challenges while we deal with less technical product. But otherwise, when it comes to a technology, we don't face any issues with those small players.
Okay. And are these small players bothering you in export market also?
Yeah, of course, for those low value product or a less technical product. Yes, they do.
Okay. And any relief from the China side?
We were anyway not facing any issue from China because for the blown film extrusion, there was not much import from China in this segment as far as India is concerned. But of course, at a global level, China was there in a competition, but now there is a relief, I can say.
And what role on board is Rajoo bhai playing now? Can you give any guidance on that?
Yes, sir. He is the chairman of the company.
Okay. Thank you so much.
Thank you. The next question is from the line of R.K. Ladha from Yash Investment. Please go ahead.
Thank you for giving me the opportunity. Good. Hello. Am I audible?
Sir. Yes, sir.
First of all, I congratulate the team, Rajoo, and the efforts the team taken to improve the EBIT level and profitability. And then my only one query is, I am reading this new joint venture of Bausno from Italy. Is it plastic pipe manufacturing machine, or are you going to manufacture pipes?
No, sir. It is again a joint. It's a new joint venture. It's a joint venture happened in 2010, and we are manufacturing machine under that joint venture, which basically cater to a PVC market.
Okay, it is yes. Okay. And means we are not going in the actual plastic pipe manufacturing. Okay.
No. Sir, our core strength is machinery manufacturing, and we would be sticking to that only.
Okay. And and all the best for the team, Rajoo. This is from my side. Okay.
Thank you very much, sir.
Thank you. The next question is from the line of Ayush Agarwal from Mittal Analytics. Please go ahead.
Good afternoon, ma'am. Am I audible?
Sir, your audio is a bit muffled. If you can take the phone off speaker or change the mode of.
I'm audible now?
Yeah, this is better. Please proceed.
All right. Good afternoon, ma'am, and thank you for the opportunity and congratulations on a wonderful set of numbers. I am new to the company, so my questions will be a little basic to start with. First, I would like to understand the cyclicality in the business that we have seen between 2010 to 2021. Our numbers used to range between 70, 80 crores, and then they jumped to 100, and then in 2018 we did around 150 odd crores, and now we have crossed that threshold in 2022. So if you can, help me understand, how the nature of the industry and how the journey of Rajoo was during this period. Also, this is a twofold question. If you can also help me understand, what I also see is that our gross margins have improved drastically in the last 10, 12 years. We used to have 30% kind of gross margins, which has now gone up to 35, 40. So if you can, help me understand with these two questions first, and then I'll let you know my other question.
Okay, so since you are new to the company, let me brief you about the company.
Yeah.
Company started 35 years ago, and it was like a first generation. Whatever opportunity comes, we never say no, and we used to take it. That's how the entire journey started. And when you talk about 2010 and now, in 2010, we were manufacturing sheet extrusion system and thermoformer as well, and that was the product which we were holding a kind of monopoly for 3-4 years, and then from 2011 onwards, the government started talking about the ban, the plastic ban, and the ban on a single use and all that. Even today, that is going on. But fortunately, we could substitute that product, and the major chunk of revenue was coming from that product. We have shifted to the blonde film line and other products to de-risk the entire business and get the sustainability in the business. One important thing which we have done is we have, in 2013, we started our in-house panel division. And that was a kind of a breakthrough for the company, because slowly we started getting the hold on actual crux of the technology and the automation. And as a result of 7-8 years of experience, in 2020 when pandemic came, when everybody was talking about a touchless integration, our product was well equipped with that. And without visiting the customer side, our engineers, our software, and our programming team has installed the machine in various countries from India. So this overall journey has really helped us to reach where we are today. And if you talk about the technology differences, the main difference is now our all machines are equipped with Industry 4.0. And that helps us to reach our product anywhere without having the personal support. We are now able to support all our customers across the globe online, and that is something which is helping customer as well in saving the cost, because cost of traveling has gone up like anything. So this is one of the area which has contributed a lot.
Right. That was really helpful, and the numbers are there to see that that the company has transformed indeed, and I didn't know about that. So thanks for the explanation. My next question is, I missed the number on export. So export is 60% of our revenues. Did I hear that right?
And that is what we are planning for the year. Okay. This year it is 49%.
Okay. So 49% is exports. And where are we exporting these machinery to majorly? If you can help me understand.
And just a minute. Mr. Jain, would you like to take this?
Yeah, hello. Am I audible?
Yes, sir.
Yeah. See, Africa continues to be a strong market for us. Currently, 50% of our exports are going to Africa. Then Asia is about 10%, and also and neighboring countries is about 40%.
Right. So Africa is predominant in our export share.
Yes, yes, because there are a lot of Indians in Africa who continue to support their home country.
Right. Okay. My next question is, on our balance sheet, which is, fixed assets, which has majorly remained the same over the last 3, 4, 5 years. So what kind of, machinery can we turn out from the existing capacity? If you can throw some light on that, and what is the peak capacity that we can do from the existing facility? Hello? Am I audible? Hello?
Yes,
Hello.
sir, you're audible.
Is Mr. Joshi there or is she online?
Yes, she's connected. Ma'am, if you can hear us, please do respond. Seems like we have lost the connection for.
Okay, let me answer that question.
Sure.
This is Sunil Jain. See, in machinery industry, capacity is quite a misnomer because there's a lot of outsourcing which is done. Everything is not manufactured in-house.
Right.
So it's very easy for us to ramp up capacities based on the market demand. But needless to add, we can easily do about 200 crores from the existing facility. And even if we want to ramp it up, it is and based in Rajkot, which is a very strong engineering hub. A lot of equipment and assemblies can be outsourced. Does that answer your question?
Yes, that does. That was helpful, sir. Related to this question only, so in the 117 number that Madam had shared on the machinery that we did in FY22, out of that, how much was blown film?
Blown
film,
blown film would be
total. If you talk about the percentage, sir, it would be 90% is blown film line, and the rest of the machine is just sheet extrusion systems and thermoformers.
All right. So these various applications that I see on our website and also on our presentation, we are yet to enter into them. So some progress on that, or how are we approaching these different sectors?
The application you have shown on our website, we are catering to all those applications. So you have a blown film line for tarpaulin as well. You can have a blown film line for milk packaging as well. So it's a different kind of a blown film, but we are catering to all.
All right. Understood. So what would be the dominant top 3-4 applications that we cater to currently? One of them would be I'm asking in all those applications that we list, what would be the distribution between them, like among flexible packaging, agriculture, infrastructure, automobile? So if you can share that number.
Roughly, you can say that 70% of the blown film goes for the flexible packaging and rest for infrastructure. And the agriculture part share the very less amount of share in that.
All right. Understood. That's it from my side for now. I'll come back in with you, and thank you for patiently answering my question.
Thank you, sir.
Thank you. The next question is from the line of Hitesh Kumar from Aksa Capital. Please go ahead.
Hi, thanks for the opportunity. Ma'am, could you just explain how important is AMC in our business, and what is the kind of revenues that we get from these maintenance and supply of spare parts?
Generally, supply of spare parts holds 10% of the revenue. And AMC, I honestly speaking, people are still not, market is still not ready to go for the AMC, and they would like to, have the case-to-case basis availability of services from Rajoo's side. Because these are the huge machines. So whosoever buys, they have their own maintenance department. So they keep a stock of everything. They have the technical staff to, reduce the maintenance time and all that. So I mean, very few prefer the AMCs. Otherwise, people have their own team to deal with that, and when they cannot, they directly connect with us and we help them out.
Mm-hmm. So in the overseas market, for all the installations that we have done, how do we cater to the need for supply of spare parts, or how do we offer them support or any technical support if need be?
The majority market we cater to, we have a good base of agents there. So we also we also encourage our agents to have technical person. During the pandemic, we trained them online, and now a good set of people are in the international market as well who represent Rajoo, and they help us in installation, commissioning, and even after sale service.
Got it. So most of our sales overseas are also routed through these agents, or if I may call them your distributors in different geographies. Is the sales happening through them? Okay.
Right.
Okay. And what is the lifespan of these machineries, and what is the replacement cycle in them, ma'am?
Okay, so companies focus more on getting the repeat order or when the customer is at expansion rather than repeatability, because the machine's life is not less than 20 years.
Mm-hmm. Okay.
So we more focus that the customer keep expanding and then they go for repeat orders.
Right. But FIBC, if I have to understand this flexible packaging, that's a fairly established market globally, right? So now, the kind of uptick that we are seeing, and if you are telling that you have a very dominant market share, how is the end market growing? And you just made a mention that it's packaging, which is your predominant end user industry to which you cater to. So how is this end market growing, and probably what is the kind of growth that we can look forward to?
It is growing exponentially, but currently, if you talk about today's market challenge is the unavailability of the plastic resins, which is the base material for them to process. So the extreme level of volatility in the pricing, which we have never witnessed in the history. So this is the bottleneck happening for our customers. And of course, when they are supplying to the MNCs like HUL or a PNG and all those things, you will not get the price rise immediately. So those are the contracts which one has to execute, which hampers the bottleneck for a while till the raw materials prices get settled down or stabilized little, and then it can further grow.
Got it. And just a last question from my side. Ma'am, which are the other areas that are we looking to diversify into in terms of our product profile? And if you can probably give some more color to it if something is in the near term, ma'am.
Correct. So for the further growth and de-risking the business from one stream of revenue, we are now developing a sheet extrusion system again, which is our core product itself, but for the different applications. So now we are targeting the renewable sector where the sheet extrusion system can produce the EVA sheet, which goes into the solar panel. So this is what we are targeting, and we are probably executing the first order in next quarter.
Oh, okay. And any immediate competitors we have in this space, ma'am?
No, the only competitor was China, and no competitor in India.
Okay, interesting. Sure, ma'am. I'll come back in the queue, ma'am. Thank you.
Thank you.
Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hi, am I audible?
So if you can take the phone off speaker, please.
Yeah, just a second. Sorry. Hi, is the voice much better?
Yes, sir. Please proceed.
Yeah, much better.
Congratulations on a good set of numbers. I'm also a bit new to the company, so my questions might be a bit basic. Sorry for that. I just wanted to know what kind of growth and revenue are we targeting over the next few years? That was my
Right.
first question. And the second question is that, as you mentioned, that we have some old orders that were at old prices. So how much differential margins can we expect from old orders and new orders? And what would be the order book mix in terms of new prices and old prices? Those are my questions. Thank you so much.
Okay. So if we talk about the old orders and new orders and the pricing, see the pricing policy we revised in April 22. So whatever orders we have is with the last year prices. And the new prices will come into the effect. Of course, it has come into the effect, but the order cycle is long since it is capital goods. So the final outcome will be visible in second and third quarter with the new prices.
Okay, thank you, ma'am. And what about the revenue growth?
So we are targeting the revenue growth of 15 to 20% for the FY23.
Okay, that's great, ma'am. And sorry, one more question, ma'am. How much time do we take from manufacturing the machine and delivering? What is the turnaround for a machine, if number of days or something?
Right. It of course depends on the size of the machine, but average turnaround time is 5 months. And if the machine is with a lot more technology and lot more components from the import, then it takes 7 to 8 months. But on an average, it is 5 to 6 months is the typical lead time.
Okay. Okay. Thank you, ma'am. That's it from my side. Congratulations on the new good set of numbers and all the best for the future.
Thank you.
Thank you. The next question is from the line of Akshay Kotari from Envision Capital. Please go ahead.
Yeah. Thanks for taking my question. Ma'am, I'm also new to the company, so pardon me for any basic questions. Ma'am, would there be any impact of EPR norms on our customers and subsequently on us, or it would be a positive impact, or can you give a sense of that?
Good question. This is Mr. Jain's favorite question. Mr. Jain, would you help me with this?
Sure. The EPR is today, for whatever reason, machinery manufacturers and raw material manufacturers are not loaded with that burden. We look at it very positively from an environment point of view. When the EPR is fully exercised, the industry is going to grow, and some products which are being banned, and once they are come under the processors execute the EPR, they will find it easier to expand the product range. So we see it quite positively. That is going to help in the progress of the industry. Does that answer your question?
Yeah, but so we are going to expand the product base, so we won't require any additional capex or something like that?
See, the way the machines are configured from a configuration point of view, they are very flexible. For example, a blown film line can cater to the flexible packaging industry as well as the agricultural industry, infrastructure industry. Similarly, sheet extrusion systems can cater to the disposable container segment, and as Mrs. Joshi rightly mentioned, also for the solar EVA encapsulant. So there's basically a upgradation or modification in technology which helps to increase the product range from the particular machine.
Okay, I understand that. And is there some order book which you have, or how is it?
Currently, we have an order book of about 75 crores outstanding orders, and this quarter has seen a good inflow of orders. So as it stands today, it's 75 crores.
Okay, that's great. And I just heard about that solar panel opportunity as well. So how much percentage of solar panel does India produce on its own? Like, I think majority of it is imported from China. So we won't be supplying to Chinese manufacturers. We would be supplying only to Indian manufacturers, right?
See, as a machinery manufacturer, it doesn't bother where we supply in the world. But to answer your question, you may be aware that a lot of anti-dumping duties have come in on solar equipment coming from China. So the industry in India is bound to grow, whether it is in terms of solar panels per se, or even the inputs to the solar panel.
Okay. Okay. And would semiconductor shortages impact us in any way?
They are already impacting because there's a huge shortage of drives and electronic components, and that is increasing our lead times.
Okay. So how much have the lead times been increased due to these shortages, and by when are they expected to normalize?
See, as far as when you expect to normalize, I think it should take another 1 year, because there's a lot of Indian manufacturing capacity also coming up under the PLI for semiconductors and chips. Yeah. So it should take another 1 year. And our lead times have increased by about 1.5 to 2 months because of these shortages.
Okay. Okay. And one of the other extrusion players has forayed into this, I think, battery, something related to battery. So is it related to our business somehow, any synergies, or is it like they have done it as a part of their capital allocation?
It's a totally different segment.
Okay, understand. Thanks for answering my questions, and all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Vipul Sanghvi from Systematics. Please go ahead.
Yeah, hi, good afternoon. Ma'am, I just wanted to check with you that our Q4 exit margins, EBITDA margins were close to 14%. So as we go ahead into FY23 first half, assuming that the legacy orders will continue till that, is it safe to assume that we'll be able to maintain that close to 14% on EBITDA level?
Yeah. See, the last quarter, generally, historically, if we talk about all Q4s, the margin and the revenue both increase in the last quarter. So that happens. But for the Q1 of this month, it may not be the same, because again, we are executing the things at the old prices. And of course, the listing gets slower as far as domestic market is concerned in Q1. So this is the historical traits, and we feel that, of course, we're going to try to maintain it, but it may not get maintained.
Understood. But what you are hinting at is, if I look at the full year FY23, we should be in the vicinity
then it will be, yeah, for sure.
All right. Yeah. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Neha Jain, an individual investor. Please go ahead.
Hi, congratulations, and thank you for taking my question. Firstly, I would like to know that what are our targets that we have set for revenue and margin for the next couple of years, say about 3 to 5 years?
Ma'am, we are targeting to have the steady growth of 15 to 20% year on year.
Okay, and as for the margins are concerned?
Of course, when we are targeting to grow with steadiness, with the objective of margin to be improved. And for that, of course, the more efforts are being put in R&D, and the product is being enhanced in due course of time.
So, do we have any products in pipeline that will come up in the next couple of years, or the products that are ongoing as of now, we plan to increase sales of those?
Yes, of course. We are going to go with the product which we are catering into currently, and of course with the new product which we already talked about, EVA sheet extrusion system for the solar. So that would be a new product, and the current product, of course, with the Blonsen line, we are able to do a good job. And apart from that, we have also launched last year extrusion coating and lamination line for the raffia industry. That's where also we are seeing the good potential.
So, how much revenue do we expect to generate from the new products?
Ma'am, in this kind of capital goods, for 1 and 2 years will not give you much of a revenue. It will give you a revenue in a later years. Mainly because this kind of a new product development, it takes 6 months to get developed, and then another 6 months to validate it commercially. And we at Raju believe that we should not, dump the product without validation in the market. So of course, for this year, you will see a limited revenue out of this solar product. But of course, for coming years, we feel that the sector is booming and it can get us a good revenue.
Okay. And my last question is related to the land that was purchased in 2017-18.
Right.
So when are we expecting the production to start over there?
Ma'am, we are thinking that in this unit is capable of reaching 200 crores. So if we target that for this year and it happens, then we will plan for the new land to come in.
Okay, so only once we reach 200 crores, we'll then have the new land in place, right?
Correct.
Okay, so what is the capacity utilization of the current plant?
It's around 80%.
Okay. Thank you so much and good luck for the future.
Thank you.
Thank you. The next question is from the line of Ayush Agarwal from Mittal Analytics. Please go ahead.
Am I audible?
Yes, sir.
Yeah, hi.
Thanks for the opportunity again, ma'am. My question is on the export side this time, since this is a major chunk of the revenue as well. So I would like to understand, so right now our export contribution is roughly around 50%. What was it 5 years ago, and how have we developed the export market, and what has been journey there like, and how is business done on the export side?
Okay, so the export 5 years ago, if we talk about, we were having a presence in around 40-45 countries, but today we are having a presence in 70 plus countries. We have a good network of agents, and along with the agents, we also realize that in a capital goods, the after-sales services are very crucial. And so now we have a good network of people in the export market as well who can service our machine even after warranty and support the customer. So.
All right. And what was export as a percentage of our revenues 5 years ago? If you have that number.
It was around 40%.
All right.
I don't have that number steady, but
sure.
Yeah, that is, we have always played with 30, 35%, 40%. This year we have reached almost 50%, and the next year target is to increase it by 10% more.
Right. All right. So in the export market, how is customer queries raised, or our agents help us get the orders? So how does the supply chain work there?
No, it's a very direct sales kind of a thing. We supply directly to our customer, and of course there is an agent who gets a commission. And when they do a service to our customer, of course they're going to invoice to us.
All right. So we pay the commission to the agent for getting the business to us. Is that true?
Correct.
All right. Understood. All right.
So it's a fairly B2B kind of a thing, direct sales.
All right. Understood. Also on this solar PV sheet business, so are there any manufacturers currently in India, or are we supplying this machinery outside?
No, we are developing this machine for Indian, and of course there are approximately 10-12 lines have came from China, which has their own issues, and of course China is not able to provide any kind of aftermarket services to the customer,
right.
As we all know. So that lead to an opportunity for us. Even during the pandemic, we installed and helped few of the Indian processors, whosoever got the machine from China. And so that is how it is. The current market size, if you talk about the numbers of machine, it is 10 to 12 machines installed and not running at a full capacity due to various issues in the machine as well. So that's where we see a lot of opportunity for us.
Right. Understood. So, and thanks for that. And my last question is, on our opportunity side, if you look at our business, I think 50% is domestic, and in that domestic, you say that we roughly have 40% kind of market share. So we are already a significant player, and of course, this is not a consumable type of thing. You mentioned that it has a long life. So new capacity needs to be built for us to, sell our machines. So how are we de-risking that part of our business that, that our opportunity size also keeps increasing because once when the capacities don't come online by the flexible film manufacturers, our business will take a hit. So is the management doing something on that end to direct the business for a somewhat sustainable growth and not see any lumpiness going ahead?
Sorry, sir, I didn't get the question properly. If you can repeat it.
Sure. So what I'm trying to understand is, that since machine sales happen only when our end customers put capacity, right? Because these have very long life. And right now, majority of our exposure is towards flexible packaging industry. So how are we de-risking that part so that we have somewhat sustainable growth going ahead, and there is there's not a lot of lumpiness that we have seen earlier?
Mr. Jain, would you be able to take this?
Yeah, sure. See, as I mentioned before, the machines which we are making, with slightly tweaking the machines, it can cater to various applications. That's number one. Number two is flexible packaging market itself is growing at about 13 to 15% every year, which means the current manufacturers need to continue to expand. And that brings in a good market potential for us, number one. Number two. Number three is what is happening is some very old machines, let's say 15 or 20 years old machines, which are energy guzzlers, they are getting replaced. So people are looking for more productive machines which consume less energy and give more output levels. So if you to answer your question about de-risking, we are expanding the application point of view from the same machines. As I mentioned before, blown film lines can be used in flexible packaging. They can also be used in infrastructure application. Similarly, the sheet extrusion lines can also be used in different applications. So we are diversifying the portfolio of applications, and that helps us de-risk ourselves from purely the flexible packaging industry.
So, yes, this was helpful, and a follow-up on this would be that if you can share some qualitative developments that must have taken place, in the last 2-3 years, like you have shared that, probably the tweaking of some machines you can get into infra. So some other examples or, some qualitative angle to this, it can throw some light on that.
See, let me explain to you. For example, if you go back 10 years, blown film lines used to be in the capacity of 150 or 200 kgs per hour. Today, people are replacing a couple of machines and they are going in for 400, 500 or 700 kgs per hour. Earlier, the width used to be 1500 mm. Now people are talking about 3-meter lines. So that kind of a shift is taking place. Because we also need to understand in the plastics industry, besides the polymer price, the other major cost is energy.
Right.
And that's where, and polymer is something which you have really no control over. So people are going in for more energy efficient machines.
Right. And are we working towards that? Are we able to cater to our customers on that?
Oh, absolutely. I mean, that's our winning point as compared to competition, not only from India and even from overseas.
Yeah, that's great to know. That's it from my side right now, sir. And thank you for your answer.
You're welcome.
Thank you. Next question is from the line of Shivam Prasad, an individual investor. Please go ahead.
Hello. Yeah, thanks for the opportunity again. Can you just highlight the inventory that you're holding for the current fiscal year?
Prakash bhai, would you take that?
Hello.
Hello. Yeah.
Yeah, am I audible?
Yeah, you're audible.
Yeah, we are holding the inventory at present for 111 days inventory. It is.
Okay. And so why is the number high, like from last in fiscal year 18 and before that you were used to hold around 70 to 75 days, but why is the number so much now? Any specific reason for that?
Yeah. Yeah, see, the reason for increasing the inventory is basically the disruption in supply chain, which has happened for the last 12 or 15 months. So the lead time of the procurement has extensively increased. Secondly, the range of machines where we are catering to the market. If you talk about the figures before 5 years, the range of machines and today's range of machines is quite different. So the inventory for all these manufacturing of all these machines, we need to keep the parts in our stock. There are very high lead time of certain customized equipment which are supposed to be assembled in the machine. So considering all together, the inventory holding has gone higher compared to the figures which were before 5 years.
Okay. So thank you so much.
Thank you. As there are no further questions, I would now like to hand the conference over to Mrs. Khushbu Chandrakant Doshi for closing comments. Over to you, ma'am.
Thank you, everyone. I would like to thank all of you for taking the time out and attending this call. I'm also thankful to each member of our Rajoo Engineers family, as well as our clients, creditors, banks, financial institutions, and all our stakeholders. For any further question or information, please get in touch with our investor relations team, PJR, and you can reach out to us as well. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Rajoo Engineers Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.